It was a
Yeah.
conversation that was happening at the biggest brands in the UK.
Exactly.
You have marketers spending huge amounts of budget who don't understand the finance, and you have finance teams setting budgets for marketing teams who don't understand marketing. I just thought it was a bit crazy. If revenue is the sole KPI, you're 5 days out from the end of the month, you're off your revenue target. What happens? You're going to double down on ad spend and put on site-wide discounts, and you'll probably hit your revenue target, and you're probably going to wreck your brand or ruin any ability to make any profitability there and then.
Yeah.
The second challenge with using ROAS is that
You are listening to Full Funnel.
Hey everyone, welcome back to the Full Funnel Podcast. I'm Rohit, your resident marketing nerd here to help you navigate this world of AI-first marketing and its strategies. Today, we're going deep on profit-first e-commerce analytics with Thomas Gleeson, the co-founder of StoreHero and a former Shopify team member who has essentially helped thousands of merchants essentially see and do more with better insights. Thomas, great to have you here. A quick icebreaker before we get tactical. Please introduce yourself to our audience. Tell us a bit about your background and what got you here today.
Firstly, Rohit, thank you very, very much for having me on today. Really, really appreciate it. I've been looking forward to this one all week, so thank you. As you've kind of alluded to there, my name is Thomas Gleeson, co-founder at StoreHero.ai. StoreHero is a profit reporting and forecasting analytics tool for DTC brands. We work with Shopify, WooCommerce, Magento, BigCommerce brands all over the world. And really at its core, what we do is help e-commerce business owners make better decisions around profitability. Name of the game in 2025. I think everybody is understanding that the Facebook tax has got very, very real for a lot of brands, and profitability is the name of the game. Increased revenue growth does not always equal increased profitability. And I think, 2025 has been, and 2024 to be fair, have been years of reckoning for a lot of brands, and everyone's just trying to get back onto the same page. My journey to StoreHero is quite a long one, to be honest with you. And it actually predates my time at Shopify, to be honest, Rohit.
Wow.
It's kind of been 20 years in the making, not even weirdly. So as your guest can probably hear, I have an Irish accent. I'm from Ireland. My mother has had an e-commerce business in the west of Ireland here for 21 years, e-com first. So I kind of grew up with e-commerce. We were at the kitchen table, Rohit, hearing about broken checkouts and bounce rates and conversion rates when I was 9 and 10 years of age. So it goes back a long time. Her business is in like personalized baby gifts, wedding gifts, Christmas gifts, that kind of thing. Her business grew for 10 or 11 years on SEO only. Right. And that sounds like a pipe dream. Listen, for anybody listening to this podcast today, they're thinking, how could I grow a business on SEO only in e-commerce today? It's very, very difficult to do and nearly impossible. But back then, we're talking mid 2000s, not as difficult. Google wasn't as competitive. SEO really was a sales channel that was quite prolific and quite profitable for a lot of brands. I think Google Ads may have even started around the same time that her website was set up. Facebook didn't exist. So we're going back quite a while. So that business ran for maybe 10, 11 years. SEO is its primary channel. About 10 years ago, we're talking 2015, I discovered this thing called the Facebook Pixel. And it was my first foray into digital marketing. I actually had a couple of e-commerce businesses myself, smaller ones as a teenager and in my early 20s. But I started running Facebook ads for my mother's business. The challenge was my dad. My dad is an accountant, and accountants, as everybody listening to this podcast will know, accountants just hate marketing. They just don't like it. It's money for nothing. You're just spending money. You're wasting it, blah, blah, blah. So he was saying to me, you're getting all these sales, but we used to get them for free. Turn off the ads. And I was like, no. The ROAS is really, really good, Dad. And he would look at me like I had 10 heads, to be honest with you. And he would say, what is this number that you're saying is doing really, really well that you're using to justify me giving you more money to spend?
Yeah.
So I tried to explain it to him. I was like, you put €1 in, you get 10 ROAS, which you could back then. You get 8 ROAS, whatever it's going to be. And he was like, okay, but you're not taking the tax into account. You're not taking the cost of the product into account. You're not taking the transaction fees, the returns, blah, blah, blah. And I was kind of originally looking at him like he had 10 heads. And I was saying, this guy doesn't get what I'm talking about. Why doesn't he get it? But the more I tried to actually understand his point of view,
Yeah.
I probably realized he was onto something. It was a directionally correct number I was looking at every week, but it still didn't really tell me how profitable we could become. It was an interesting metric, but there was a lot of ambiguity around it when you mix in different channels and return rates and et cetera, et
100%.
cetera. So what my dad forced me to do was basically build out this spreadsheet. And he
Okay.
said, look, if you can bring in all the numbers from, we were on a platform called Volusion at the time.
Okay.
I'm going back quite a while, pre-Shopify. He's like, look, if you can bring all the numbers in from Volusion, GA4, or MailChimp account, again at the time, the Facebook ads, the Google ads, and you can show me that you've spent 10% more this week and you've generated more profit. He goes, not revenue. Anybody can drive more revenue. He said, if you can spend more money and generate more profit, you can have as much money as you want to spend. But until you do that, we're not turning any ads back on.
Wow.
It was, I was kind of forced to manually build out this spreadsheet. And I used to
Really
update it every Monday. I used to update it
amazing.
every Monday, and it was painful, but it did get me into a way of thinking that I really, really liked. And I had all the product costs in there, the marginal costs. Got to a
Amazing.
position where I was trying to basically articulate this concept of contribution margin
Yeah.
without even realizing it had a name at the time.
Yeah.
I didn't realize what I was calculating, but it was contribution margin, which was kind of
Right.
ironic. So where are we at now? That's probably 2019.
Okay.
From 2019, I joined Shopify. I
Okay.
originally went in as a support agent,
Right.
working with brands, helping them set up stores, add a product, how do I connect to Facebook Pixel, etc., etc. Quickly moved into a merchant success manager role where I spent the next 2.5 years. So for anybody who's not familiar with the
Amazing.
Shopify merchant success manager role, it's essentially your point of contact at Shopify, who is your account
Right.
manager essentially for your Shopify store. But you start getting into conversations with founders around everything from marketing strategy, e-commerce strategy, Shopify product roadmap. For
Right.
me, it was my dream job, if I'm going to be completely honest with you. I had gone into Shopify with kind of a premonition that I just want to go in here for a few years, learn
Yeah.
how the best brands operate, and then leave and start my own business in
Amazing.
e-commerce. But
Amazing. You're
after a
literally
couple of
born
years,
into it, right?
I was literally born into it, yeah. What I kind of quickly realized was, and I started working with some really, really big brands in the UK. The challenge in my house, right, between my
Yeah.
mother, who is the product and the creative person, but not necessarily a finance person, and the mismatch then with my dad, who is an accountant and a finance person, but like doesn't have a clue about e-commerce or doesn't understand marketing at all. It's
Yeah.
like those two parties, that relationship and the jarring between those two parties not understanding each other was
Yeah.
not confined to our kitchen table. It was a
Yeah.
conversation that was happening at the biggest brands in the UK.
Exactly.
You have marketers spending huge amounts of budget who don't
Yeah.
understand the finance, and you have finance teams setting budgets for marketing teams who don't
Yeah.
understand marketing. I just thought it was a bit crazy. So
So
I
you
left
literally got
Shopify.
front seat or seat at the table watching all these brands crank out all this revenue, millions of dollars, but still struggling with their profit margins, right? Or bottom line, understanding what's really driving the bottom line. So what's that aha moment that first pushed you to kind of decide to build StoreHero?
Yeah, it probably was like showing the spreadsheet to a lot of the merchants I was working with,
Mm-hmm.
like our
Mm-hmm.
family spreadsheet. I was
Okay.
kind of showing them the
Wow.
template, and a lot of them said, "Can we have this to use
Uh-huh.
on our store?" So I actually approached the one of the heads of revenue at Shopify at the time. I said, like, "Why don't we build this?
Right.
Everybody loves it."
Okay.
And he kind of asked me, would I just do this full time at Shopify? And then I left, basically. I was doing my degree in the evening time while I was at Shopify. And I did
Okay.
my final year project on the spreadsheet to turn that into a business. So basically, the week I graduated, I also left Shopify and went full time at StoreHero. And that was nearly 3 years
Okay.
ago.
Amazing. Amazing. And what was that essentially that aha moment, right? Because like you've seen all these 6 and 9 figure brands or whatever, whoever you're working with, they've done quite a lot of mistakes, so they're kind of misguided, right? What lessons would you say kind of drove this building of StoreHero, and what kind of still guides you today?
Like at its core, it's being able to help business owners
Hmm.
confidently run their business.
Yeah.
I think we can all agree like iOS 14 was a day of reckoning for e-commerce.
Yeah.
It was challenging, really, really hard. It was a very, very difficult time,
Yeah.
even at Shopify. For the first time post iOS 14, ad spend just got so much more expensive.
Yeah.
And I think, if you go back 4 years ago, you could just run a business and just scale the hell out of revenue, and you probably were going to be very, very profitable
Yes.
because the ad spend was so efficient. You actually didn't really need to understand the underlying unit economics and the profitability of your business because
Yeah, absolutely.
the ad spend was so cheap. But as iOS 14 came in, that was kind of my aha moment. And like, okay, this spreadsheet that I've now built has
Yeah.
become so much more valuable because our ad costs have gone up so much. And I no longer put €1 in and generate more profit.
Yeah.
It's starting to decline a little bit, and I need to figure out where in the funnel that's happening. So,
Yeah.
to be honest, iOS 14 was probably the kicker that
Okay.
scared a lot of people in e-commerce and definitely made the spreadsheet that I was working on in the business that bit more valuable.
So yeah, so for most of these e-commerce brands who are currently still stuck in this whole world of ROAS, right? And essentially struggling to move to kind of like profit first metrics. I think you call this like the mirage metric of 2025, right? The ROAS metric. Could you walk us through StoreHero's kind of profit equation, right? Essentially what input matters and what inputs matter and how does a brand's day-to-day decision making change once they swap out all these ROAS metrics for real profit per order kind of metric.
Okay, perfect. Before I go into that, I just want to
Yeah,
explain, I think, why you should make the change before the impact of the change and what that means for
yeah,
brands.
absolutely.
Because most brands still today are still using revenue and channel attributed ROAS as the two North Stars in the Monday morning meeting. It's like, okay, how did our revenue go up this week? What's our ROAS like? And that dictates everything else. The challenge with that is neither of those numbers are correlated with profit.
Yep.
You incentivize your agency, your e-commerce managers to drive more revenue. If revenue is the sole KPI, you're 5 days out from the end of the month, you're off your revenue target. What happens? You're going to double down on ad spend and put on site-wide discounts, and you'll probably hit your revenue target, and you're probably
Yeah,
going to wreck your brand or ruin any ability to make any profitability there and then.
100%. Yeah,
The second challenge with using ROAS is that there's just so much not taken into account. Like if you're it's first of all, it's including your sales tax in the return figure, whereas
yep,
it's not in terms of what you're actually spending, obviously. On top of that, then you've got the challenges obviously with attribution,
yeah,
which is its own topic and its own,
yeah,
and then it's obviously not factoring into account any of your COGS, your EPL, returns, that kind of thing. So, like for some businesses, like we have one business in the UK, and it's just the nature of the product. They have about a 50% returns rate, so the
wow,
ROAS is often doubly counted because it's not a real reflection in terms of what they're getting. So that's
definitely.
just the challenge we see. I was even speaking to one of our customers last week. It's about a 25 million pound brand in the UK, and they have an attribution tool in place that
Hmm.
is it's been what the primary mechanism that the agency that they're working with has been using to show value. But the CFO was also on the call and was like, the ROAS looks great every week, but we're in financial ruin here at the moment.
Yeah,
And when I kind of dug into it, like they're not monitoring any level of profitability on a weekly basis to dictate
yeah,
or quantify success of the paid media spend.
yeah,
So from my perspective, if you're trying to scale a business profitably
yeah,
in 2025 and you're not tracking profitability, you're on a guesswork mission and you're hoping it works out without any true mechanism in order to quantify that correctly on a weekly basis. So
yeah.
that's just my, I suppose, challenges with monitoring ROAS as just its own primary North Star. ROAS is
Hmm.
still very, very important on a weekly basis. It's still very much directionally correct. It will tell you where you should be spending your budget, but on an
Yeah,
overarching business level, not the best metric to be gauging success of your overall paid media spend.
100%. Yeah, for sure. So agree with that completely. We see this all the time at LifeSite. It's kind of scary, how quickly metrics can change, or your North Star metric can actually change and completely ruin, your CFO's day.
Yeah,
And yeah, and obviously they've been told, CFOs have been told about, that the ROAS metric is what is needed from the marketing team, right? And it's
yeah.
kind of ingrained in your brain over all these years. And unfortunately, that's been the wrong direction all this while, right? So can you tell us a little bit about Store Hero in terms of how you solve the problem, right? So essentially, you're essentially stitching data across, ad channel, Shopify, finance data, all into a single place. What are these sources? What are non-negotiable? And how do you keep this data fresh and clean?
Yeah, of course. So yeah, as you mentioned, we're hooked into all of the primary e-commerce channels. We're hooked into
Hmm.
your Meta, your Googles, your TikToks of the world. email channels, GA4, Search Console, subscription data, all that kind of good stuff. But
Amazing.
most importantly, which often these platforms can miss, is the numbers, the costs,
Okay.
the cost to get these products out the door. And I'm not just talking product costs. I'm talking
Okay.
like the transaction fee. Are you using a buy now, pay later solution with an increased transaction fee?
Okay.
You work with a 3PL, you have shipping costs, even though you give out a lot of free shipping.
Right.
You have returns costs back to the 3PL. There's so many little, I call them paper cuts, that go
Right.
into fulfilling an order from a margin perspective that are not
Mm.
just product. One of the biggest challenges, or one of the biggest eye openers for brands when they plug a StoreHero in, is that the 70% gross margin that they thought they had
Yeah.
is actually more like 55% or 50% in some instances,
Right.
because they've been building the whole gross margin profile of the business,
Mm.
not accounting for returns, not
Yeah.
accounting for discounts, not accounting for all the free shipping, the
Yeah.
3PL, or the transaction fees. So for me, like when you're trying to build out a forecast for a brand, the first thing you need to be so sure of is, what is the fully loaded gross margin profile of my business? If you get it wrong and you build a CAC model or a spend model purely built on a gross margin that is just product only, you're going to end up massively overextending yourself from a paid media standpoint and
Mm.
cost yourself a lot of cash and money in the meantime. So for me, that's
100%.
one of the non-negotiables that is super important. So yeah, we're hooked into those channels from a marginal cost standpoint, also hooked into the likes of, ShipBob, ShipStation of the world to bring in all the shipping
Okay.
and the 3PL information.
Interesting.
So we're really kind of trying to get all that information live into the platform as much as we can, and everything updates at least every 15.
Interesting. Interesting. Also, like accounting software and like sales tax software and stuff like that.
So as long as the sales tax data is coming into Shopify, it's going to pull
Okay.
directly into StoreHero. We
Interesting.
have a Zapier integration that we are kind of pulling a lot of accounting data through, but we are building a Xero and QuickBooks integration out as we speak.
Awesome. Awesome. And maybe you can share with the audience, what is that first dashboard that e-commerce founders are opening every morning? Which are the most popular ones on Store Hero?
Yeah, it's changed.
Mhm.
You have a preconception. You have a preconception of what you think people will want.
Yeah.
But we kind of changed it maybe 6 or 8 months ago.
Okay.
Every conversation that we have with our customers is like I often say, like, the primary mechanism that anybody derives value from any reporting or analytics tool is purely based on the ability to understand the information correctly and then
Yeah.
use that to influence their strategy to hopefully hit the goals that they want.
Yeah.
The challenge with that whole process is that if they don't correctly understand what they're looking at, and a lot of people don't understand what they're looking at in these tools. There's a lot of acronyms in here. People are busy people. They don't have time to get up to speed with every single number and how they all relate to each other.
Hmm.
You end up either making wrong decisions, or you end up not using the dashboard in the way it should be. And it
Right.
just becomes a pretty wall of numbers,
Yeah.
which does happen. So we changed the structure of the main dashboard first and foremost a couple of
Oh,
months ago. So we have like four key numbers, in my opinion, the four most important numbers for any ecom brand,
right.
first and foremost up there in what we kind of call a spend advisor. So
Okay.
when anybody logs in, they can see sales, spend, efficiency, and profitability. So we
Okay.
want to understand at its core, that's e-commerce. Have we spent more on marketing? Have we spent less on marketing? How has that impacted not just revenue, but most importantly, the profitability? And there's a little summary under that chart every single morning or whatever time period you want to look at it through to tell
Right.
you if the decisions you made in this time period with respect to your marketing spend got you to your goal. Maybe you overshot the cannon and you've hit more revenue, but it's cost you from a profitability standpoint. It
Right.
just gives the business owner very, very quickly the main pieces of information that usually most business owners want to understand is, how
Yeah.
effective is my marketing? Have we made the right decision? Should we increase or decrease our budget?
Awesome. Awesome. Wow, that sounds really powerful. And also you mentioned forecasting itself. Can you explain how this forecasting algo or engine works? Like how do they see these profit projections?
Sure, of course. Again, when we took a step back and interviewed a lot of our customers and even some of our
Hmm.
competitors' customers a couple of months ago, one consistent theme came up is that we need to be able to see very quickly what is good and what is bad. That's an analytics tool.
Hmm.
You shouldn't need to spend too long in a tool to figure that number out. You
Yeah.
shouldn't have to spend ages in a dashboard or in any reporting tool to
Yeah.
figure out what is good and what is bad. So we wanted to be able to basically create an ability for brands to have a traffic light system beside each number in StoreHero to tell
Okay.
them number good, number bad, essentially.
Yeah.
So the easiest way to do that is going to be building a forecast. The
Yeah.
challenge with the forecast was that most DTC brands will, not most, a lot will struggle to create a forecast correctly
Mm-hmm.
that moves away from just finance numbers.
Okay.
So usually the forecast is going to be created by a finance team, a CFO, a controller, whatever it's going to be, but it stops at finance. It doesn't bring in like marketing, new customer counts, Klaviyo revenue,
Right.
CAC, the numbers that e-com marketers and e-commerce managers will live and die by every day.
Yeah.
We were like, okay, how do we make this easy for people to do and that they can spin up pretty quickly?
Mm-hmm.
So we also figured out that brands really struggle to create a marketing budget that is aligned truly with their goals. Some people will really overestimate what's possible, and
Yeah.
other brands will like massively underestimate what's possible. So
Okay.
we were like, okay, how do we figure this piece out? So we said, okay, if we can start with the 4 things that brands know to be true,
Okay.
and I'll explain what those are in a second.
Yeah.
Can we work backwards to figure out if we have the 4 non-negotiables,
Mm-hmm.
what does our marketing budget look like? And the 4 non-negotiables, Rohit, are we pick out our net sales value. Every brand needs to know their net sales value. Every brand does know their net sales value, their target for 2025, 2026, whatever it's going to be.
Right.
Okay, so we have our overall pie, call it the
Mm-hmm.
full sales revenue. Now, if we're to fulfill that level of sales, what is our percentage of COGS? So do
Mm-hmm.
we have a 40% COGS? Do we have a 30% COGS? Whatever that is going to be. So we
Right.
have our COGS value. StoreHero automatically calculates that figure for you. The next
Mm-hmm.
piece is, what is my operating expenses to run my business? And you're
Yeah.
probably wondering, you want to understand my marketing budget. Why do you need to know my fixed costs? Well, I need to know your fixed costs because I need to understand what costs you need to cover to tell you what marketing budget you need. So give me your figure for your staff, your rent, software fees, whatever it's going to be.
Yeah.
I have your fixed cost to keep the lights on. And the last piece that's just crucially important for brands that often people don't think about is, what is my profit target at the end of the year? And we here treat profit as a bill that you
Right.
need to pay yourself. Let's treat profit as that bill that is just an absolute non-negotiable for your business. Once we have those 4 figures, we're just working backwards to figure out, okay, if those 4 things are true, and you should know all those answers to those questions, what does that leave me to spend with from a marketing spend perspective? And if that's
Right.
true, what is the efficiency I can afford to run that budget on? And at its core, that's a lot of the forecasting piece. Once we agree on what that forecast looks like, we basically overlay that with all of last year's seasonality, and it builds out a full forecast for every single number in StoreHero, so that when
Amazing.
you log in, you can see not just where you are versus sales last month, but where you should be for this month versus the target. Where are you? Your sales could be down this month, but
Yeah.
you could be on target because last month was a big month for seasonality. So we just find that kind of cuts through the noise and helps brands understand in a little bit more a clearer way to how they need to influence their strategy going forward.
Right. Right. Amazing. Yeah, that sounds like a really interesting approach and also very helpful. I think forecasting is still hasn't been solved in a big way across all kinds of different use cases. Like, for example, I was talking to this LA based apparel brand, and they're struggling with just demand forecasting, right? Understanding how to optimize my inventory. That's their biggest problem. And of course,
Yeah,
that also then informs their marketing side of things, and the balance between merchandising and marketing. It's an interesting problem to solve, and it'll be interesting to see where all of this comes together after some time. Awesome. So let's talk about also maybe some case studies, right? Can you share a scenario, perhaps like someone using these tools and essentially seeing this massive change, and when it comes to some of the decisions they've made based off StoreHero?
yeah, sure. So we were working with a company called Viba. It's a
Okay.
Finnish footwear brand,
Oh.
8-figure brand, and we started working with them probably two and a bit years ago at this point.
Mm-hmm.
When Viva onboarded initially, very much in the ROAS first mindset. And, when I plugged them in initially, I got really, really excited because the gross margins were very strong. Efficiency rates were through the roof, but
Right.
they were holding themselves to a really, really high efficiency bar that we were then able to kind of change the internal methodology around optimizing for MER and contribution margin first and foremost. And actually within, I think it was 8 to 12 months, they had 108% increase in net profit. We can't take credit for that. Obviously, the team, had built the brand up long before StoreHero ever came near them. Those guys actually had an incredible business, but were holding themselves to such a high efficiency bar
Mm-hmm.
that it was coming at the expense of scale and profitable
Interesting.
scale. And it was just a mindset shift internally to optimize for contribution margin first and foremost that allowed them to really push the boat out from a
Right.
paid media standpoint, hitting lower ROASs than they'd probably ever hit before.
Mm-hmm.
But contribution margin was scaling rapidly. Contribution margin dollars for that brand started just skyrocketing, and they've been
Amazing.
on a really, really good trajectory ever since.
Fantastic. Wow, that's cool. And yeah, let's talk a bit about, some of the things like actionables that people can take away from this conversation. Across your customer base, what would you say are like the top three profit killers, right, that you've spotted over the years? This kind of might help someone kind of understand where they should be looking. And so, the usual suspects are like essentially bottom of the funnel, overspending, and then like hidden fees or over discounting. Could you shed some light on that?
Yeah, of course. Yeah, it's particularly in the US
Mm-hmm.
because of Amazon. Not many people charge for shipping.
Yeah.
It's often a day of reckoning for a lot of brands when we plug in the ShipStation or the ShipBob account and
Yeah.
show them like what you're actually paying for shipping and how this is like massively impacting the gross margin that you have on your products. So for
100%.
me, I think free shipping. I'm not saying like don't do free shipping, but like
Yeah.
I think a good rule of thumb, and again, every brand is different, but a good rule of thumb is like 20% above your AOV. Yeah, you probably will see a hit to your conversion rate, but is conversion rate the biggest metric there, or is it contribution margin, or is it net profitability?
Yeah.
Because you may get a better conversion rate, but you could be hemorrhaging gross margin on your first purchase. If you
That's right.
can remove a lot of that free shipping and you can free up the $8, $9 that you're paying for the shipping, you can
Yeah.
plow that straight back into your CAC to increase your new customer profile at essentially a free cost. Like
Right.
it's a free run, it's a home run. So
Yeah.
it's not necessarily a killer, but I would just say like those little paper cuts that I kind of talked about earlier when you fulfill an order, everything from your 3PL, free returns is another one.
Mhm.
Why are you giving free returns out? Is it built into the strategy? Like
Yeah.
if you're an apparel brand, particularly
Yeah.
in fast fashion, most fast fashion brands will do free returns, and there's like
Hmm.
very serial returners out there.
Yeah.
They're all margin killers as well. Your 3PL is going to charge you for every returned item that comes back in. You're
That's
covering
right.
the label costs. You also covered the cost to get the product out there and
Hmm.
the shipping cost out there. That's a pretty big bill that you're going to have to pay every single time somebody returns a product. So again, I'm not saying to remove free shipping, but
Yeah.
absolutely quantify it and understand why we're doing it and the
Yeah.
potential impact if we did remove it. Again, you might see a drop in conversion rate, but
Yeah.
are you going to have a big impact on your gross margin profile on that first purchase? Another one, and the last one I would probably think of is it's not necessarily a profitability killer, to be honest with you, but it's understanding, and it kind of goes back to be honest, the last 2 points I touched on.
Hmm.
Not everything is a CAC problem.
Yeah.
Facebook isn't the problem of all of your issues.
Yeah.
A lot of businesses will just consistently try to optimize for lower CAC, lower CAC. How do we get our CAC down? When actually the secret of e-commerce is understanding how can we scale the business with the highest CAC possible? How
Right.
do we get our unit economics to a position where we have enough gross margin on that first purchase that we can afford a much higher customer acquisition cost? Because as we all
Yeah.
know, the higher that you can actually amount of pain that you can take from a CAC perspective and still
Yeah.
be profitable means that you're going to scale the business way faster than anybody else can.
Yeah.
If you're an apparel business, take two apparel businesses, and one of them has $30 of gross margin on first purchase, and
Yeah.
one of them doesn't do free returns, doesn't do free shipping, and has maybe a higher price point. If they have $60 on that gross margin on first purchase, you're
Hmm.
now up against somebody who can spend double the amount that you can in the
Right.
Facebook ad,
Yeah.
budget process.
Yeah.
And that's a very much an unfair advantage. And I think in e-commerce, we're all trying to
Definitely.
find what that unfair advantage looks like. So yeah, we need to consistently look to try and optimize CAC, but try
Yeah.
and optimize for your first order gross margin even more so. And I think this is often an area that brands don't think
Hmm.
about enough. I think agencies
Yeah.
get a lot of flack for not hitting CAC targets and ROAS targets, but
Yeah.
ecom managers and founders have just as much responsibility to make sure that they're not slashing
100%.
discounts, giving out loads of free, shipping returns that are putting marketing under so much more pressure. If we go back to the $30 example,
Yeah.
that brand needs to have so much better marketing because they're giving off because they're taking on so much less gross margin on first purchase.
Exactly.
So just
Yeah.
thinking about that methodically and strategically is so important, because it's an area I see a lot of brands overlook.
Yeah, 100%. I think, yeah, I mean, it is the responsibility of the brand owner as well as then the people managing the brand to kind of take these decisions, right? You got to know what you're working with in order to kind of drive those numbers, right? Can't be relying on an
Correct.
agency to do everything. We have something called an incrementality adjusted P&L view that
Yeah.
essentially helps the brand kind of understand what they have to work with regards to the acquiring new customers and how long can they wait for the payback period and stuff like that. Amazing. So maybe we can talk about the teams as well, that you can see that you kind of can advise on in terms of suggest in terms of how they should be structuring the teams. Not every brand can hire like a squad of data analysts, or even not the marketers that they've hired are data savvy, right? How do you define this, and what kind of upskilling advice you give these founders, right? Perhaps like a roadmap for those who are struggling with their numbers.
Yeah. If I look at our book of business in StoreHero, I would say 80% of brands are working with agencies.
Mm-hmm.
I think e-commerce is morphed from a marketing play to a
Right.
finance game wrapped in a marketing cloak.
Yeah.
And if you're working with an agency who doesn't understand that,
Mm-hmm.
that's the most core element of my team. I'd be looking to say, okay, if these guys, if you think about it, like the paid media budget for most e-commerce brands is the heaviest line item of the whole P&L. The person responsible for deploying that capital on behalf of your brand is essentially the biggest investor in the whole business.
Yeah.
So if that person does not understand the financial objectives of your business or know what a gross margin is, know what a contribution profit is, you're essentially giving responsibility of the most amount of capital to be deployed by somebody who has no understanding of the financial objectives of your business.
Yeah.
So first and foremost, from a team perspective, I would make sure that whatever agency that you're looking at
Mm-hmm.
is fluent in talking these numbers. And it's not as fluid, it's not as common out there as you actually might think. So at its core, I think first and foremost, your paid media team need to understand the finances of your business. But
Mm-hmm.
there's an onus from the founder's perspective as well. There needs to be an openness and an honesty there, because
Yeah.
we hear it from some agencies where they can't get cogs from a founder. The founder won't
Mm-hmm.
give the agency the cogs. They won't tell them what their profit objectives are. While you might think that as a founder, while you might think that you're keeping your secrets close to your chest, you're essentially asking somebody to throw darts blindfolded to hopefully hit a
That's right.
great result for you. It's very, very difficult to deploy capital at scale in these ad platforms if you don't know what the target is. And if you're not
100%.
willing to share that information, I don't know what you can really expect in terms of having an agency who really has your back, because the agency can't have your back if they don't know what the target is.
Yeah. Yeah. Definitely.
That's probably one piece from a team perspective. I think the other one is kind of pretty obvious at the moment, trying to get as many people upskilled on the latest AI tools in the market right now. I do
Yeah.
think I think we're going to see consolidation in team size within DTC brands. I think we're going to start seeing some pretty large 8 and 9 figure brands with, single digit teams in the not too distant future. Probably
Right.
are seeing them already, to be honest with you.
Amazing.
There's a conception out there at the moment that SaaS is going to die because AI tools are out there. I don't think that's the case. I actually think SaaS as a percentage of brands, OpEx every month is actually going to increase.
Yeah.
But the head count in the brand is really where you're going to start seeing the decrease, because you won't need as much people to do a lot of the manual tasks
Yeah.
that your team are doing. So if you can have a team that are willing to try and invest time to understand the latest AI tools in the market right now, I think that's a really solid way to build yourself or future proof the size of your team. Like right now, we're kind of seeing OpEx as operating costs as a percentage of revenue on
Mm-hmm.
average for brands in that kind of 16 to 22% rate. I was reading on Twitter last week. There's a big DTC brand. I won't name them, but they have their OpEx as a percentage of revenue down to about 8 or 9%. That may not sound like a lot to a lot of people listening to the podcast, but if you're able to half your OpEx as a percentage of your revenue,
Yeah.
you have so much more room to push on marketing spend to scale
100%.
profitably without sacrificing anything. So again, that's probably the other piece. So just to recap, two,
Yeah.
you want an agency who can speak to the financial objectives of your business,
Right.
and you want to make sure that your team is investing time to understand the best AI tools in the market right now.
Amazing. Amazing. That's great advice. Yeah, I think AI is definitely changing the landscape. There's a lot of automation and,
Huge.
tasks that can be tackled with AI very easily, so that teams can actually be focused on more strategic stuff, and really driving the numbers, right? All right. Let's move on to the lightning round. So one sentence answers. What's a KPI you check before coffee?
Contribution margin.
Nice, nice. What's the most overrated e-commerce metric today?
You can probably guess what I'm going to say.
Yeah.
Channel attributed ROAS.
Okay. And what is an AI tool that you've added to your stack this quarter?
We use a tool called read.ai for all of our calls. Incredible tool, feeds directly into our HubSpot, summarizes every call, creates action items. I think even if you're not in SaaS like both of us are, and you're in e-commerce, you're on calls every day.
Yeah.
Everybody's calendar is full. If you
Yeah.
can find a way to just systemize and create your action plans for you on the back of calls, create your follow-ups and your to-do list, such a time saver,
Amazing.
and make sure you doesn't forget anything.
100%. And what's a marketing myth you'd like to bury forever?
Lifetime value is a measure of AOV or revenue. It's a measure of gross margin. You can't forget that.
100%. And what's a quick win for brands who are stuck in dashboard paralysis, basically?
Understand is your key. Make sure that your North Star is aligning to your objective.
Awesome.
And be very critical of yourself in making sure that you're not fooling yourself and thinking that. Is the
Awesome.
North Star that you look at on a Monday morning directly correlated with what you want to achieve for your business?
Amazing, amazing. I believe you're also building like a D2C e-commerce community in New York, right?
Yeah, we are. We've started up it's called DTC Builders New York. So anybody who's listening to this and is based in New York, I'll pop the link over to Rohit. We can pop it in the show notes after this.
Yeah, for sure.
We have a meetup.com group. We have over 800 members in the group already, which is amazing. And we run events monthly in the Shopify space in New York. So
Amazing.
Anybody who's listening who's in the area, we'd love to see you down at some of the events.
I'd love to pop by the next time you do that. To everyone listening, if today's conversation sparked any new idea or you found it helpful, hit follow so you don't miss another episode, and share this one with a teammate who's kind of knee deep in spreadsheets and who might need some help. And don't forget to follow Thomas on LinkedIn, and he's also building a D2C and e-commerce community in New York. So do check that out. Until then, keep testing, keep learning, and I'll catch you on the next Full Funnel. Thanks, Thomas. Nice to see you. Bye.
Thanks, Rohit. See ya.